Why don't real estate agents ever play hide and seek? Because good luck hiding when the housing market is this hot. That's a joke. But what's not a joke is the potential of real estate in India. A game where the right knowledge can turn you from a seeker into a finder. We're going to dive into how you can get started, use other people's money to buy your first property, create profit from each one, and build multiple businesses. Now, wouldn't you love to play in this hot market? Stick around to know how. Imagine buying a house with someone else's money. Sounds great, right? But is it possible? Absolutely. Let's dive into the intriguing world of real estate and discover how this can be done. Picture this. You're at a bustling marketplace. You spot a beautiful golden apple that you know is worth far more than its price tag. The only problem? You don't have enough coins in your pocket. Enter the wealthy merchant, who loans you the money to buy the apple, with the agreement that he gets a small slice once you sell it. This, my friends, is essentially how third-party financing in real estate works. You find a promising property, a lender provides the funds, and when you sell or rent out the property, they get their share. It's a win-win situation, a dance of trust and profit. Now, the advantages of this approach are clear. You get to invest in properties without having the capital up front. However, like any business venture, it comes with its own set of risks. Market fluctuations, interest rates, and property management are some of the potential pitfalls you need to navigate. But don't let these challenges deter you. With careful planning, a keen eye for value, and a dash of courage, you can turn these hurdles into stepping stones. And remember, every great empire was built one brick at a time. So the next time you're playing Monopoly, remember, it's not just a game. It's a business strategy. Now, let's say you've got your property, but how do you turn that into a money-making machine? You might be pondering, and rightly so. Imagine this. Your property is the star of its own Bollywood blockbuster, raking in the big bucks. First up is rental income, the steady paycheck. Your property's version of a daily soap opera, consistent and ever-present. This is a recurring source of income, a regular Sas Bahu saga with your tenants playing the lead. Next, we have property appreciation, the suspense thriller of real estate. Over time, the value of your property grows, much like the plot twists in a nail-biting thriller. It's a longer game, but often the payoff is worth the wait. Lastly, think about business opportunities. Your property could be the set for the next big reality show, like Airbnb or co-working spaces. It's new, it's exciting, and it's a hit with the millennials. And just like that, your property is not just bricks and mortar, it's your golden goose. One property down, a whole empire to go. But how do you get from one to many? It's like cooking a pot of biryani. You start with one spice, let's say your first property, and you let it simmer. That's your initial investment growing. Now you're ready for the next spice, your second property. But wait, you don't just throw in the new spice. You use the flavor from the first to enhance the second. It's the same in real estate. Use the profits from the first property to finance your next venture. As you continue to add more spices or properties, your biryani or real estate portfolio becomes richer and more flavorful. Each property adds a unique flavor, creating a dish or an empire that's uniquely yours. So the question is, are you ready to cook up your own real estate biryani? It's all about mastering the art of blending the right properties together, just like spices in a biryani.